Good evening, guys. Ken at Tortoise Capital, Nightly Strategy Podcast, November 23rd, 2021. I'll jump right into it with the market health check. So the 10-day range got even tighter today. It's just about 2% wide. Today, there was a slight sell-off and then a recovery back into the middle of the dragon, but you'll notice that everything is tightly clustered in here in this, which is typical of that sideways kind of a chop that we have right now. That looks like there's about a $4, about a 1% band that feels significant. So there's the 10-day high yesterday. See the Z2, the Bollinger Bands are starting to compress a little bit. We got Z2 up here at 478. The all-time high 473.59. The peak of the RL10 remains here, which is like at 470 and some change. The RL10 today is fairly close to that, still in the fall. Summer ended here, it went into the fall, is slightly above the dragon. So all that looks good. The 3-period hull is sloping downward slightly. So there's a bit of a decay that's caused by, this 2-day peak to trough is why this hull is pointing down, even though it closed slightly higher today. The fact that there was so much selling pressure today in this part of the price is what pulls the hull down. So the hull uses the high, the low, and the close as part of how it computes its position. So that's why we got a slightly negative downward slope in the hull. We've got the Bollinger Band mean, eyeballing it there at 460. The 2.5% sell-off is just above the Bollinger Band mean at 462. The 5% is down here, basically at Z-1. So, I will be optimistic tomorrow going into Thanksgiving. Probably a light volume day tomorrow. But I will be optimistic in this range. And then above there is where I will pick up I'll pick up a swing trade posture there. I would be cautious down to about the 2.5% level. This will be, I don't mind taking tactical intraday shorts in this region. And probably I would just say, let's say all the way down to the Bollinger Band mean. And then below that is where I would pick up the a negative swing bias once it breaks below there. Those would be positions I'd be willing to hold overnight. Something like that. Okay. Other than that, the PSAR extension is pointing straight up. That's favorable. Notice that today did not trigger a PSAR flip because the PSAR is being built off of the RL10. And so the RL10 is still right here. So there's this little bit of a buffer between the PSAR and the RL10. So today's price action did not trigger a PSAR flip. That's important to note. That's one of the reasons the PSAR, as we construct it, is fairly smooth and can absorb a little bit of noise like today. I mean, otherwise, what's key is that you had a close and a higher close, so it's still slightly upward. Okay, let's look at the sectors. All right, so we had the S&P with a fractional win today at 0.13. Emerging markets slightly off at minus 0.10. The Russell off 0.17. The Qs off 0.46. The Dow slightly better at 0.51. And then treasuries were the biggest underperformer, off 1.45. That's actually a favorable sign for the market. Let's look at the outperforming sectors compared to the S&P. So we have wood at 0.21. Commercial real estate, Simon Property Group, 0.6. Consumer staples, 0.66. Agriculture, 0.74. Next up, blockchain, Brazil, finance, blended commodities from 1.0 up to 1.8. Then marijuana, energy, oil up to 3.2. Then a real nice cluster of, let's see, we have the Bitcoin complex. So you get Bitcoin futures, 3.7. The Bitcoin Trust, 3.8. The large cap blended cryptos, 4.7. And then Ethereum up 7.17. Individual, let's see. Then we had a strong sector with XOP in the oil exploration. Strong individual company performers, Devon Energy, 5.6%. TX, the steel company, 2.45. Alcoa, 1%. Coinbase, half. Cliff and Apple and US Steel all better fractionally, but better than the S&P. So the metals retain their strength today. All right, underperformers compared to the S&P sectors. We got materials, 0.1. So it's instructive when the metals do better than XLB, the materials. That means that they were, the boys were buying metal today. And this was not just inherited strength from the materials sector. S&P Bio, 0.08. Mexico, flat. Tech, the other lumber, minus 2.3 or 0.23, I should say, and 0.3. Consumer discretionary, 0.7, minus 0.7. The FANGs, minus 0.9. ARC Genomics, 1.37. Moonshots, 1.38. Clean energy, 1.56. Lithium, 1.7. Wheaton Precious, minus 1.76. VXX, minus 2.25. ARC Innovation, 2.33. And then take a look at our underperforming stocks. Tesla off 4%. The roller coaster continues. Virgin Galactic, 1.5. PayPal disruptor, 0.75. Robinhood disruptor, 0.68. Microsoft and Squarespace, both weaker. And then finally, John Deere. I would expect John Deere to start doing better. They resolved their strike today. So they should be getting back into business. They got a good 6-year contract with the workers, showing the power of labor is not completely dead. Yeah, so for tomorrow, I think it's finance and energy. Finance and energy is a place to look. And I'd be looking for more strength in the metals, to be honest. And shouldn't neglect agriculture here. You got, it's a green on the monthly summer, and then on the daily, it's also daily summer. So that's good. It's pretty strong. That may be the strongest sector of all. Yep, that's the strongest sector. So that's a handy way, by the way, of if you like particular signals, like if I want to just find out what's in a daily summer in TC 2000, I can hit that. Well, there's 3 of my standard elements are in the daily. There's a bunch in the fall, a bunch in the winter, and a bunch in the spring. Or no, 1 in the spring, I should say. So you can actually get some nice frames like this. Like if I really want the long-term relative strength, I would sort by monthly summer. And then this tells me agriculture is really interesting because it's monthly summer and daily summer. And I like the fact, let's take a look at this now on the daily. Yeah, that's what a long-term monthly chart. So if I scroll out to monthly, that's what a monthly summer looks like. All right. You can see the harsh sell-off down here to 13. And it has just quietly gone from winter to spring to summer and crushing it. And it's not even overbought yet because of the power of inflation. That thing is just getting started on the monthly. Now, if I come and look at this frame of reference on daily charts lately, you can now see that this thing has broken out of a trading range. And is free and clear. And, no resistance to overcome anywhere. That's probably not a bad idea. We have been tracking this one all the way up. You notice the Kata 2s that we've been identifying on the daily from way back when this was at 14. We saw this box as an opportunity at the double bottom and then a breakout inside there in the usual way. That's your Kata 2 entry. So I think there's a lot more room in agriculture to keep going. So this is one way that you can rapidly assess the situation based on a seasonality approach to markets and sectors and targets. If I was really interested in like the early in the spring, in the monthly spring, I might go to something like oil and say on a monthly basis, oil is in the spring. Let me find a monthly chart here. So still early days. And all this has done since the time of COVID was go from 17 all the way back to the Bollinger Band mean at 56. That's the power of a log scale, by the way. And those of you that have been with us for more than a year or so, you will recall during the hybrid workshops and the nightly strategy meetings, the way we looked at the opportunity of oil when it was down here around 18 bucks. And we framed this trade by watching the decaying reversion to the Bollinger Band mean and the climbing out of the hole on a monthly basis. That's a no-brainer. So that's one way that we can use the 4 seasons to rapidly find the macro level trends that we're really interested in. So I'm really interested in monthly springs and summers, but you can expand this to look at the other ones as well. I also look at weekly spring and weekly summer. So now if I go to a weekly chart, I'm kind of really interested in lumber right here, because you'll notice that it's got a weekly spring and a daily summer. So what's that look like? So wood has cooled off on the weekly chart. It just turned into the spring today. And then when I go to a daily, you can see that the spring has turned to summer, and this thing is starting to climb out of this. It's subtle, but there's a tight trading range in here that was bounded by the peak of the RL10s. It couldn't break above that. The RL10 couldn't, but now the RL10 has. The RL10 has now pulled out of that trading range. So now, as I think about this, I'm willing to take this trade from the bottom of the dragon, risking about $1. And then my upside is going to be the peak of the dragon. Whoops, wrong one. Peak of the dragon. That region up in there. So that's about a 3-to-1 reward to risk ratio. And I like that a lot. So that's just a quick look at how the use of 4 seasons can help you find trades that might otherwise not be found through more structured or technically precise filters. You know, the market is a messy place, and there's multiple time frames. So if you watch the seasonality model is a way to use a rapid heuristic to evaluate things on different time frames in a standard way, because we all understand the logic of seasons and what that means, right? Let me know in chat if you found that helpful. Yeah, Peter makes a good point. DBC is a great blend of both agriculture and oil. So it's really, and there's 2 other components in there too. There's the base material or base metals and precious metals. So you get the 4 blended commodities in DBC: oil, ag, base metals, and precious metals. So DBC is pretty useful in that way, which is why I have it in my stack, because it represents an important aspect of the market. All right, let's take a look at some trades from the boys today. They've done real good with what was available. All right, so this is the E-minis from Jamie, and he's looking at 5-minute charts. It's the ES contract. So one of the things that I noticed, and we saw this again yesterday, is that when you have a penetration to the downside that gets past, here's the Z2 line, is that blue line, and there's his Z3 line. So this penetration gets past Z2 all the way down to Z3 and then reverses. So now you got a 5-minute bar here that's a white candle. If you take that, Jamie, as like a 1-2 entry on the 5-minute chart, I think you can use a universal entry with a risk box like that and improve your entry instead of going here, getting it here. And then you are still getting like the universal exit here. That makes a pretty nice trade right there. And even the one you got was excellent too. And I like how quickly you said, let me get paid when that starts rolling over for 0.8. There's the sharp sell-off down to the VWAP. This thing rolls over again, rejects the edge of the dragon. So we get short here. Beautiful. Takes a 1-2 exit for 2R. Now, this is where I might also say, a doji that's way down here, and then he takes that as a entry, and I might take that as my risk box, just swing low. Second entry. I like the second entry because it took out this high, and you're still on the south side of the VWAP, so you're getting this at a value. It chops around, doesn't really follow through back to the RL270, which is what we want. And so he scratches this one. I'm sorry, that wasn't the second entry. That was the first entry. I was thinking of that as the stop and reverse. In fact, that was just the exit on this one. I might take this as a 1, 2, 3 entry. 1, 2, 3 on the 5-minute charts. Because you got more, you had 10 minutes in there for that thing to fail further, and it didn't. So maybe the direction is up. Nice job staying out of the chop. I like this one. This was a good effort because you had a big 1, 2 and broke through the VWAP. I like that effort. I like the exit even better. I'll take a 0.5 R loss in this. Then he gets the PSAR flip. He buys the PSAR breakout with a nice tight stop. And then that one makes 1.5. So on the day, he's 0.8. He's +2. He's 1.5, and he's minus 0.5 and a scratch. So that's 4.3 minus 0.5, 3.8. Make bank. Well done. Take a quick look at Luke here. Lots of chop today in Cliff, but he gets what was available. There was was there a trade in here earlier? Yeah, I think this was probably the end of the day yesterday and made bank on a short one. Here's the gap up, sells off and resumes. It crosses the VWAP. Notice here's the VWAP. Bottoms out, crosses the VWAP, so he's alerted. When it breaks above here, buys it with a stop at the PSAR. Gets a second position. Good exit. We might have scratched it. Remember, if you turn that minus 0.2 into a 0, that makes the 1 a 1.2. So now instead of 0.8 net, you're 1.2 net. And that's a 50% improvement. That's the difference between a 1, 2, 3 exit and letting this come down here for a micro loss. Just saying. Then if your short position is at the break of the dragon with the stop here, that could be your second entry. That could be your third entry. And then a 1, 2, 3 exit in here. Still, that's not bad. So that's 2.6. That could have been 4 or 5. But I love this one. And this one's good, waiting for the crossing of the VWAP. I'm not violently offended by that. I'd like to see this be the stop and reverse long. Then that makes this more of a scratch. Good patience, not getting caught in the chop. I like this. This was a reasonable breakout from the river and good scratch or a micro loss. That should be a scratch, not a loss. There wasn't much available the rest of the day, but he still is able to crank out 2.0 execution R on a grinding kind of a day. So that ain't bad. Nice work in there. I mean, I think you got what was available. Here's a quick lesson on the on a Z3. This is not a Z3 pinch because the Z lines are still expanding because of the gap. So here was the close. Oops. Here was the close. Here was the gap. And notice how the VWAP jumps up to here and then stays pretty flat all the way through. And now you have this compression zone. The RL10 rolls over and now everything is tightly clustered inside here. The PSAR has caught up and everything is nicely tight and clustered inside this like a coiled spring. So I'm ready to go this way or that way. I could see how on the downside it wants to come back through the Bollinger Band mean and down to the RL270. Up here, I can see how it wants to get to Z2 and Z3 and maintain that same energy of the gap. So there's our green line entry. Wouldn't you want to just not lose money on this trade and just say this and just lock it in? Why not? Yeah, Richard, you can do that easy. Just set a bracket. One cancel the other, OCO. Simple. It's working. Why not just lock it in? Just keep locking in the 1 bar low. Probably only wonder why didn't I have a second position on this thing? Should have. Starting to roll over. Now I can think about how about I just add a time stop on this one and just make that extend the PSAR and then lock in that move there like at about a 2 bar low. So I'll take that 2 bar low as my exit. And then if it doesn't fail through there, then I'll pick up the PSAR. And then there's an exit. So that's about a 1, 2, 3, 4 hour win. That one happens to be in the Ethereum trust. It's in a critical state. One of the movers. It was the best performer right from the get-go, right from the gap. on heavy volume. And then it reverts back to the VWAP, and then everything is normal from that point on. So that's a sideways quiet breakout, like a visual box trading, and just locking in bits of gains, and then picking up the PSAR when it calms down. All right, this one is a lesson on regression line fractal framework. And there's a couple things I want you to notice. Our old reliable US Steel. So US Steel is showing us it was a gap up. You'll notice the VWAP is rising and the PSAR was rising. And in this blue circle, you'll notice that you have the VWAP, the RL10, the RL270, the RL30. So everything is really tightly clustered. Now the RL90 is still playing catch up, but the RL270 is in there. So right now, the only reason this is not even a super pinch is because the gap made the Bollinger Band still pretty wide, and the RL270 is out. But otherwise, it has a lot of the features of a super pinch, but not quite. So you get one move, consolidation, the second leg up. So this is the point that I want you to notice. For now, after the first hour, we're about at 10:20 an hour into the day. This is where, in this blue circle, is where the RL270 is. And this is where, in this blue circle, the RL10 for price is. So the RL270 is the long-term buy and hold. RL10 is the trader's price. This blue arrow shows the distance that the traders were able to move the RL10 away from the RL270. That's how much power the traders had. So back here, those were at the same price, and now the traders took it up while the RL270 is just cruising along. So if it has this much power to move up, the reversion to the mean is this move. So you get that move. And now what you have is a Z3 pinch happening. And now the RL270 is here, the RL10, the VWAP, the RL30, everything is in here except that stupid RL90. So you have like a temporary way station. It's not a super pinch yet. It's not a Z3 pinch yet, but you do have about 20 bars of sideways quiet channel, all clustered tightly around the VWAP. So I could play this one and just say, well, it might resume and move to the top of the stack. I wouldn't be surprised by that. It did that once already. Now, as I'm estimating how far down can it go, I want you to, this is how we use the regression line fractal framework. I take that, the same power that they had to move it up, the RL10 pulling away from the RL270, it could move it that far down from the RL270. So if this breaks down below the RL270 where I've drawn my box, that looks like a good entry to me, because that will have taken out this long sideways price channel in here. And then it could get back, this dotted arrow is yesterday's close, or that dotted red line is yesterday's close. So all it's going to do is that move that's available is simply getting back to yesterday's closing price. So that wouldn't be surprising. So there's an entry. On the breakdown, use the top of the yellow box. If you were feeling froggy, you could take the Z3 Bollinger Band breakdown for a second position if you wanted. Your choice. And then notice it comes right to the price, to the penny. This move down is the same move to the upside from the RL10 stretching away from the RL270. That's how much power the traders have to move price. So this is the least surprising move of all. That's just what traders are able to do. So there's a 1, 2, 3. Just take that one. Take that exit and be content. And then you made bank on this much. You made that much profit against that yellow risk. That's about 3, almost 4R on a single position, just using trade geometry, the regression line fractal framework from the hybrid trading course. Okay. It's also in the foundations course at a primitive level, but that's really all you got to know about that is when the RL10 and the RL270 are together, the next thing that happens is that traders are going to move price away from there in one direction or the other. How far can they move it? Calculate that price, that the size of that move, and then that becomes a reasonable follow-on move in future frames. Okay, works on every time frame because on the swing trade you're measuring that move in terms of the numbers of ATR boxes it can move or percentages that it can move. So the regression line fractal framework. Okay. All right, let's go to the daily. Let me know if you found that helpful. All right, let's go to dashboard number 1. Bullish normal, overbought long term, stalling shorter term. The risk Z is still warning us about the possibility of sharp downward moves. So we're still in the winter of risk C. It has pulled back from swing high a little bit. Still got strong channeling and overreaction signals. Although IWM has come off the channeling because it had a little bit of a bounce. Plenty of auto framers to choose from. American Express is interesting because of the channeling and overreaction signals and a 5DD, and it's 3.3 to 1. That's a trade you should be framing if you're interested in swing trading short term. That's an obvious one. And Disney at 5.5 to 1. In the ETFs, you got a ton of goodies that are lined up on the auto framer. These 551Ws are all up compared to where they were 5 weeks ago, down compared to where they were 5 days ago. And today was a white candle. So it closed higher than it opened. So a mechanical entry on that offers a universal entry with a favorable reward to risk. So that makes DIA very interesting tomorrow. It's at 2.2 to 1, and today was a positive day. And materials were a 551W. Yeah, Ken H asked me to take a look at Tesla. We'll get to that in a short minute. I'm going to say yes on that one. I'm surprised if it's a 1, 2, 3 because it failed like 4% today. So we'll take a look at. Was that on a daily or a 30-minute? Let's see here. So these are all your 2 to 1, better than 2 to 1s. Yeah. Yeah, I suspect that's probably pretty good because it still has a lot of juice in it. It's made such a nice recovery from 1,000, and I think people are still conditioned that a 4% loss today is simply a chance to buy Tesla on sale. I think the market is still conditioned to do that. Not much on the daily squeezes, still being dominated by the fall in both the symbols, ETFs and in the Dow. Apple, Home Depot, Procter, and Pfizer looking strong. Those are your winners in the stocks. Finance and staples in the ETFs. I also think, yeah, the energy sector still is showing some signs of life also. Everything else looks normal. This compression is a bit troubling. Like, all right, you haven't failed, but you haven't resumed. So, we're looking for a big move coming out of that or a big fail. So the longer this goes unresolved, the more troublesome that looks to me. Failure to follow through. Okay. All right, let's take a quick look at Tesla by popular demand. All right, so this was that little roller coaster ride. We talked about this one before as being the opportunity trade. And so coming out of that doji, that was nice. And then it peaked here and then could not make another new high. So today's little sell-off is troubling, but it did recover nicely to close above the skin of the dragon. And the slope of the dragon is up on the daily. The RL10 is up. It's above the Bollinger Band mean. So I like that entry as a speculation. And I would say, as long as your risk, if you're taking that strictly as a trade, and you were looking at about a $30 risk, maybe a $40 risk, I think that's legit. $40 risk for position sizing. And you're looking for a price target up here, I think, of about 1170. So you're looking for 1180, about $70 to the upside for sure. And then if it breaks above there, you got a good shot of getting above 1200 again. So the daily looks solid to me. And so the 30-minute, yeah, I like that. So now when we take a look at this. Get this out of the way here. Yeah, so it looks like his 1, 2, 3 entry is probably treating that as bar 1, bar 2, and let me guess, you probably have an entry right about 1100 even. Does that sound about right? And then I would say, yeah, if I want to bring this back a little bit, because using a 30-minute chart, you can refine your stop a little better. Sorry, I didn't want to make that box so big. Yeah, so if you're long from there, I think I would support that. I'm guessing you probably went about to 1090, so maybe a $10 risk. That would give you, so if you were trading $400 of risk, that would allow you to get like 40 shares. And then your upside target on this, the first one is Bollinger Band mean. And that'd be a 4-to-1 trade. Yeah, I like that one. I think that's legit. The fact that it had, solid support in here around 1080. Yeah, I like that one. I mean, Tesla's the true believer stock. Everything else ARK owns is getting smashed, like Roku and T-Docs, and but Tesla's hanging in there. I like that one, Ken. I think that's good. All right, that's everything we got for today. We'll get this posted and processed then posted, and we'll get ready to crush it again tomorrow. All right, take good care, guys, and we shall see you.